Hello everybody and welcome to my monthly Vietnam update. In October, the Vietnamese stock market extended its correction, marking the third consecutive month of declines in 2023 after an impressive first half of the year. The VN index underwent a notable decrease of 12% in US dollar terms this month, bringing the year-to-date performance to minus 1.8%. The October decline was primarily driven by a substantial sell-off in several key index heavyweights, particularly Vinhomes, which witnessed its index weighting drop from around 5.7% to the current 4%. This sharp descent exacerbated the existing weak market sentiment in Vietnam. Additionally, heightened geopolitical tensions and concerns among domestic retail investors led to the nervous profit-taking and margin calls, contributing to the overall selling pressure. Amidst this challenging environment, the healthcare sector was a relatively bright spot with a modest decline of approximately 2.2%, while all other sectors faced declines ranging from 9% to 20%. Despite recent setbacks, we view this correction as a positive development, potentially paving the way for gains in the last 2 months of 2023 and in the year ahead. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel in order not to miss any updates. Thank you. There were two main factors contributing to the market's instability in October, namely the ongoing conflict in the Middle East and the depreciation of the Vietnamese dong. VND is the ticker symbol of Vietnamese dong. Also, Israel and Palestine are not significant trade partners for Vietnam, accounting to less than 0.5% of the nation's total trade. The concerns surrounding the rise in global oil prices triggered unease among investors, particularly local retail investors. These investors often have limited knowledge and are susceptible to media influence. Vietnamese media outlets amplified the potential impact of this conflict on the global economy, even portraying it as a protracted crisis. This in turn led to a degree of pessimism among Vietnamese investors. Market liquidity saw a sharp reduction to around a daily trading volume of $400 million compared to $1 million seen only a few months ago. However, drawing on our decade-long experience with this market, we maintain confidence that the media's perspective will evolve, eventually restoring investors' confidence and prompting them to return to the market as usual. Thus, the reaction of local retail investors, which typically accounts for approximately 90% of the daily trading volume, is expected to be a short phenomenon. Another factor contributing to the benchmark's negative performance was the recent foreign exchange weakness. This exchange rate between US dollar and the VND reached a record high of around 24,800, causing the VND to depreciate approximately 4% year-to-date against the US dollar. The increase in the US dollar's value in the global market, coupled with the US Federal Reserve's decision to maintain high interest rates to control inflation, while the State Bank of Vietnam continues to reduce key interest rates to support economic growth, has created a substantial interest rate differential between the US dollar and the VND. This situation has led to a surge in the US dollar VND exchange rate. Given the strengthening of the US dollar, we regard the VND's depreciation of around 4% against the US dollar in 2023 as not a catastrophic development, especially when compared to other currencies around the globe. In a year marked by weak global consumption, the Vietnamese government may opt for a flexible FX policy to bolster the nation's exports rather than strengthen the local currency. when comparing the VND to most other developed market currencies such as the euro, Japanese yen, Korean won, Chinese yuan, Aussie dollar, Canada dollar and other G20 currencies, a 2 to 4% depreciation of the VND in 2023 is quite reasonable. As a result, we hold a strong belief that foreign exchange dynamics are not significant long-term concerns for Vietnam. Instead, the current situation is best understood as a unique set of circumstances arising from the persistent increase in the value of the US dollar and the broader issue of weak global consumption. In response, a flexible VND policy can serve as an advantageous tool for the Vietnamese government to support the export sector while concurrently augmenting its foreign reserves. In line with our perspective, estimates by the International Monetary Fund, IMF, suggest that Vietnam's foreign reserves are on a positive trajectory. These estimates indicate that by the end of 2023, Vietnam's foreign reserves are projected to reach $98.8 billion US dollar, with a further growth anticipation to $110.5 billion US dollars in 2024. These forecasts underscore the nation's commitment to maintaining financial stability and resilience, enhancing its capacity to navigate through economic challenges and fostering an environment conducive to sustained growth and development. It's worth noting that we view the VND's depreciation as an active policy choice driven by various factors. When considering the fundamental aspects of Vietnam's economy in 2023, there are more positive signals than negative ones. The country achieved a record high trade surplus of $21.7 billion US dollars in the first 9 months of 2023. Additionally, foreign direct investments, FDI, disbursements also reached an all-time high of $15.9 billion US dollar. Remittances to Vietnam in 2023 exhibited a substantial growth, reaching $14 billion US dollar. Notably, tourism has made a remarkable recovery, contributing approximately $10 billion US dollar to the country. Also, tourism has not yet fully returned to its pre-COVID-19 levels. Its significant rebound has been a valuable support to the nation's economy. According to estimates by the Vietnam Tourism Department, the number of international visitors is expected to reach an all-time high of 18 million visitors by 2025, further contributing to the nation's revenue. Well, this is all for me. Thank you very much for listening, and you're gonna hear again from me next month with a new update. Thank you and goodbye.